Have you ever wondered why only a few people truly get rich in the financial markets, while the majority keep losing money? Most people follow the crowd, get caught up in herd mentality, buy when the market is booming, and panic sell when everything crashes. But here's an interesting truth. Legendary investors like Warren Buffett, George Soros, and Michael Burry don't do that. They think differently, go against the trend, and that's exactly how they generate massive profits. Is contrarian thinking in finance really the key to making money? Why does going against the crowd help you build wealth instead of making you fail? How can you apply this mindset intelligently and effectively? This isn't just theory. These are real lessons that have helped great investors change the game. If you want to master this way of thinking, don't leave this video, because I'm about to share secrets that the average person will never tell you. Hit like if you find this topic valuable. Subscribe to the channel now so you never miss out on the most valuable financial insights. Turn on the notification bell to be the first to get smart investment strategies. Are you ready? Let's get started. Most people panic when the market turns red, frantically selling off as prices plummet. They rush in when prices are soaring, afraid of missing out on a chance to get rich. That is the essence of herd mentality, and also the biggest trap on the path to financial success. But great investors are different. They observe, they reflect, and they make decisions based on real value, not emotions. They go against the crowd, they act differently, and they become wealthy. There is a saying, the crowd is always right during a trend, but always wrong at the extremes. When people shout, buy now, the price will keep going up, brilliant minds start selling. When the market bleeds, when the news is filled with fear, great investors quietly accumulate assets. Warren Buffett once said, be fearful when others are greedy, and be greedy when others are fearful. But how many people actually do that? When the market takes a sharp downturn, do you dare to buy while everyone around you is running away? That is the greatest test of contrarian thinking. Michael Burry bet on the collapse of the U.S. housing market in 2008 when the entire world believed that home prices will never go down. He was mocked, doubted, but when the bubble burst, he made billions. George Soros also bet on the weakening of the British pound when the Bank of England was desperately trying to maintain its value. The world thought he was crazy, but in the end, he took down an entire central bank and pocketed over $1 billion in a single night. Contrarian thinking is not about blindly opposing the crowd. It is clarity in the midst of chaos, patience while others are restless, and finding opportunity where others see only risk. But most importantly, it is about independent thinking. The crowd may be right for a moment, but the financial market does not reward the predictable. The market only rewards those who dare to look deeper, go further, and act while the world is still in doubt. Who will you be in this game? A small fish swept away by the current, or a silent predator waiting for the right moment? The answer does not lie in the market. It lies within you. The financial market is never a straight line. It fluctuates, sometimes in an utterly irrational way. But within these moments of madness, the greatest opportunities lie hidden. When fear takes over, when prices plummet uncontrollably, when people panic and flee, that is precisely the moment when contrarian minds emerge. Assets that were once highly sought after suddenly become abandoned. Small investors sell off in fear of losing everything, while the wise quietly buy in. They do not see the market through panicked eyes, but through the gaze of a predator, looking directly at the true value hidden beneath the dust of uncertainty. Bitcoin in 2017 is a prime example. When its price soared near $20,000, millions rushed to buy in, fearing they would miss out on the chance to get rich. But those with contrarian thinking saw things differently. They recognized the bubble. They realized the frenzy was driven not by real value but by herd mentality, and they quietly exited. The result, a year later, Bitcoin crashed to $3,000, shattering millions of dreams. Or take Amazon in 2001, when the dot-com bubble burst. Amazon's stock price plummeted. People called it a failure, a company on the verge of bankruptcy. But contrarian investors thought otherwise. They did not look at the price, they looked at the potential. They understood that Amazon was not just an online bookstore, but a future giant. They bought in when others ran away. And the result? Those who patiently held on to Amazon until today have seen returns in the thousands of percent. Contrarian thinking not only helps you buy assets at a discount, but also teaches you when to exit. When the market becomes overly euphoric, when everyone believes prices will only go up and never come down, that is the sign of a bubble about to burst. And those with contrarian thinking will be the first to step out of the game. The difference between a loser and a great investor does not lie in the ability to predict the market. It lies in mindset. Do you have the courage to buy when the market is collapsing? Do you have the clarity to sell when others are still intoxicated by euphoria? If so, massive profits are no longer out of reach. They are the reward for those who know how to see beyond the crowd. The financial market is a playground full of paradoxes. When everyone believes that prices can only go up, that is precisely when they are ready to collapse. When people panic and flee, opportunities often lie hidden in the ruins. Contrarian thinking is not about fighting the market. It is about knowing when the market has strayed too far from reality. Have you ever noticed that when an asset constantly appears on the front page of every newspaper, when everyone talks about it as a once-in-a-lifetime opportunity, that is actually a warning sign? This is what people call a bubble, and bubbles do not last forever. When Bitcoin hit $20,000 in 2017, when tech stocks soared during the pandemic, when real estate was praised as invincible, contrarian thinkers had already started exiting because they understood one thing: the crowd always arrives too late. But contrarian thinking is not just about selling when prices are high and buying when they drop. It is the art of seeing value when others see only fear. When the market is in panic mode, people focus only on bad news, on the sea of red flashing across their screens. But great minds think differently. They see through the fog of uncertainty to find assets that still hold value but have been irrationally undervalued. When COVID-19 struck, airline and tourism stocks were dumped mercilessly. But those who understood the true nature of the market knew people will never stop traveling. Once the world recovers, these companies will come back to life. And they were right. To apply contrarian thinking, we must cultivate patience and unshakable discipline. The market will test your convictions. There will be times when the entire world seems to be against you. When you buy in the middle of panic, the following days may be even worse. But contrarian thinking is not for the faint-hearted. It is for those who believe in their own analysis, who are not swayed by the crowd. Can you hold your ground when the whole world is laughing at you? If you can, the rewards will be worth it. But do not mistake contrarian thinking for recklessness. You cannot simply buy an asset just because its price is falling without a risk management strategy. Not every asset that declines is an opportunity. Some things collapse and never come back. That is why you must always have an exit plan. Set stop-loss levels. Diversify your portfolio wisely, because even when you go against the crowd, you still need a roadmap. Contrarian thinking is not for the masses. It is for those who dare to think independently, who accept solitude when the market is in chaos. But those who master it will not only make money, they will take control of their own financial destiny. Contrarian thinking is a sharp weapon, but if not used correctly, it can become a double-edged sword. Simply going against the crowd does not mean you will be right. A strong trend can last longer than you expect, and going against it without a clear reason is like charging into a storm with your eyes closed. There is a truth that contrarian investors often forget. The market can remain irrational longer than you can stay solvent. Many people shorted Tesla in 2019, believing its stock price had been pushed too high, that it was just a bubble. But Tesla continued to rise, breaking all limits, and they ended up losing billions of dollars. They were not wrong in theory, but they were wrong in timing. Similarly, in 2008, when the financial crisis hit, some investors believed that gold prices had been pushed too high due to panic. They sold, thinking they were ahead of the market. But gold did not drop, it kept rising, becoming a safe haven asset in a time of chaos. They forgot one crucial thing. The market does not care about your personal opinion. Contrarian thinking does not mean being stubborn. If the market continuously goes against your view, stop and ask yourself, where am I wrong? Are you relying on data Or are you simply clinging to personal beliefs? The crowd is not always wrong. In a strong trend, if you persistently go against it, you will be crushed. The difference between a successful contrarian investor and a failed one lies in flexibility. Knowing when to go against the market and when to follow it. Knowing when to stand firm and when to change your perspective. Those who go against the crowd do not always win. But the true winners are those who know how to go against it at the right time. Remember, the market does not care how smart you are. It only rewards those with the right mindset and the patience to wait for the real opportunity. Going against the crowd can help you generate massive profits, but it is not always the right move. The market is a giant wave. Sometimes you swim against the current to find opportunities, but other times you must go with the flow to survive. There is a truth that very few people recognize. Contrarian thinking is not an impulsive act, but an art honed through discipline, analysis, and patience. If you buy in just because the price has dropped sharply, if you sell just because the market is overly euphoric without any analysis, that is not contrarian thinking. It is gambling. And the market is not a casino. It does not reward the blind. Successful investors not only know when to go against the crowd, but they also know when to follow the trend. If the market is booming due to a genuinely strong trend, you cannot simply oppose it just because you want to be different. Going against the market without a valid reason is no different from sailing straight into a storm with a broken boat. You need preparation, a plan, and a strategy. There is a saying, the market is not wrong, you are just not patient enough. The biggest opportunities always arise when the majority is driven by emotion. But if you are not patient enough to wait for the right moment, your contrarian thinking will become a double-edged sword. So how can you apply contrarian thinking effectively? Combine it with technical analysis, fundamental analysis, and most importantly, strict risk management. Never let yourself fall into the mindset of, I must be right. The market does not care about your opinion. It only reflects objective reality, and those who know how to listen to that reality, who know when to move forward and when to step back, are the ones who survive and win. Final advice: if you want to use contrarian thinking to make money, learn to analyze instead of acting on emotions. Control your feelings instead of letting them lead you. And most importantly, be patient, because money is not for the impatient. It is for those who are calm enough to wait for the golden moment.